Goldman Sachs has sold off a big percentage of their portfolio. What's going on? We'll talk about all of that. Let's go. Now, if you've been a subscriber to the channel for a little while, you know that last quarter I covered what Goldman Sachs had done with their portfolio, and I wanted to show you this along with an anomaly. Asset management harvesting progress of balance sheet equity portfolio. They refer to as harvesting, but you can look right here, just showing you this is year-end 2020, showing you that essentially they had $20 billion worth of their assets. And then the actual rise in prices of everything had increased that by an additional $5 billion. They added approximately $1.5 billion. They sold off $5.5 billion worth during this period. And so they end off roughly about the same $21 billion. That's the second quarter of 2021, right? Now look what's different. Look at this. First thing we notice, bottom left corner, they show you the year-end 2019. They don't show you 2020. They don't give you the numbers for the previous quarter. They give you this. Okay, so you're looking at $22 billion. Now, of course, we've seen everything go up, $9 billion. They added approximately $5 billion during the period, but sold off a whopping $16 billion. That's huge. Now, of course, you add in a few things together and, I can understand they needed to sell off certain things or that, but this is $16 billion. And again, they end off the third quarter at $20 billion. Now, maybe they have some internal rule where this is where they're trying to keep it at and so on. But I just think the amount that they've sold off should be very telling that they do not want to take increased risk. They're not eliminating their portfolio entirely, but certainly they are trying to manage the amount of risk that they're taking today. We'll talk more about that in just a second. Now, I think it's so important to understand what happens with buybacks. Stock buybacks allow companies to, instead of investing in research and development, maybe giving dividends, they want to pump this right back into their stock and send the price up. Now, as an investor in the stock, this looks really good because, at least in the short term, it definitely has a positive impact on the price. US share buybacks authorization announcements through October 8th, and already we are looking at some record highs. Cumulative S&P 500 buyback execution since the start of 2009. All it's showing you here is that it's about $7 trillion worth through this period. Stock buybacks have been the #1 buyer of stocks, if that makes any sense to you. Look, percentage of annual US corporate repurchase executions, and December 9%, November 12%. So we are going to see what happens, but they're just showing you historically these are good months for share buybacks, which means that the price can be pushed up higher from where we see today. Flows into global equity funds, again, going to record levels. Never seen anything like this before. So much money is sloshing around, and it's making its way into equities, among other things. But if you see what's happening, you actually can look at it on this chart. The velocity of money. The velocity of money has declined considerably, and just see, it's going down. There was this sort of resurgence, as you can see on the chart here, from the second quarter into the third quarter, but that of 2020, but that has declined since. Now, I think it's important to look at the velocity of money to understand what's actually happening and where is the money going? Where is it going to? Where is it going from? This just gives you a little bit of insight that it's slowing down. And then we have this. I posted about this in the blogger community section of the channel. Jerome Powell sold more than $1 million of stock as the market was tanking. All of this business related to the Federal Reserve, and nobody wants to identify the fact that the institution itself is doing things on a daily basis that they shouldn't have the ability to do. They devalue the currency and ultimately are underlying all the problems we have today. Their actions are really making it happen. And to clarify, this was October 1st, 2020. I know I had a lot of people asking, wait, are you talking about 2021? Oh, the market came up after. But this just shows you what he had been doing throughout the period. And you could see that for yourself, okay? He's not timing the stock market perfectly and so on. No. But his actions are, some say that he shouldn't be doing these things because it may be affecting what, information that he's being aware of that the public isn't. That's the point. This just shows you the GDP now estimate, where they believe the GDP will be, okay? And it just continues to go down and down and down. And why? Because the economy is slowing down. The stimulus is fading and the supply chain problems and inflation continue to mount. That's why we have many individuals coming out and saying things like this. L. Arian says investors should prepare for bigger market swings. Fed unleashed liquidity wave, which eventually tends to break. Absolutely and completely true. And you have countries like China right now that are selling off their treasuries, going back to levels we haven't seen since 2010. I've been telling you about this. I've been keeping track for you. And of course, this is, in fact, the case. Thinking about the following, this is from Deutsche Bank, by the way. Thinking about the following institutions and their approach to monetary policy, do you think the bigger risk, i.e. policy error, at the moment is the moment that they are going to be too dovish or too hawkish? And they break it down into Fed, ECB, and the BOE. And according to this, the Bank of England has the worry more so of being too hawkish. So look at this right now. You can see the Bank of England says it will act on inflation. So I believe the interest rate right now, their main interest rate is at 0.1%. Yes, current record low 0.1%. And essentially saying, look, inflation is getting hot. We have to act. That's the central bank suggesting it. They don't have to necessarily go crazy, bring it up to 10% and just create an immediate recession. They don't need to do that. But they can take slow and slight actions to make a difference. So they can, break it down a little bit further in here, but I just wanted to bring all this to you and really the importance to highlight what has been happening. If you appreciated this information, hit that thumbs up button because it does support the channel. It makes it more likely that these videos will end up in your recommended feed. So definitely do that. And just to say, if you want to find me on any podcast platform, if you want to find me out there, just type in the Money GPS and I'm sure you'll find me. That's all. Take care.